quadrillion-dollar market of post-trade processing of securities being moved into distributed ledger technology. What does the Eurozone think about this? How does the entire capital markets look at this approach? Usage of digital assets for institutions are subjected to regulations, and regulations are based on which country you are in. Say for example, in United States, Mexico, Australia and some other countries, they have actually laid out a framework and they are still updating it. So institutions can actually work based on this. However, if you're actually moving into countries like Argentina, Brazil have no classification of digital assets. At the same time, countries like Thailand, Philippines, Australia, Mexico and United States of America are focusing on refining their standards and regulations pertaining to the digital asset usage. So once they have a clear regulation, institutions can actually start implementing what they've been planning. As more and more giants from tech space and other corporates are entering the space of digital assets, governments have to speed up regulating this current space, or their nation will eventually be left behind. In Japan, 3 large banks are going in on digital payments addressing cryptocurrencies. Now that is a huge change if you look at Japan as a nation, because they were actually big on the regulatory clarity for digital assets. They named it digital assets way before other countries, when others were still calling it cryptocurrencies. As the regulatory clarity is there, nations and institutions within that nations can actually partner with fintechs. Like as we see in Saudi Arabia, the Monetary Authority of Saudi Arabia was actually working with Ripple from a long time. Now they actually have this regulatory clarity in place for their country, basically based on the payments infrastructure. They are actually looking at this as a financial service. And now there is another partnership from MoneyGram. So if we look at the current space, Saudi Monetary Authority is working with Ripple. Now MoneyGram is being, as a partner of Ripple, is partnering with other banks. So this will actually change the entire cross-border payments from Middle East to the outside. Along with that, as the regulations are clear, other nations like say Africa and all will get the advantage, and the G20 is actually looking at that. They are looking to support these regulations for worldwide adoption. And once that happens, as Stuart points out here from this tweet, it really works.
Seeing an alternative payment market actually arising from here, more opportunity with that, lower cost of payments, and also using cryptocurrency instead of moving into fiat currency. So for ourselves, we're using Ripple in order to effect a payment transaction using a blockchain underlying enabling technology, but also using XRP cryptocurrency.
So if you have doubt about how this is going to turn out, you should actually take that out, because the entire space is being regulated, and once the regulators give a clear go ahead signal, then automatically the entire digital asset space will take off. And jumping back into this article from DTCC, in which they actually talk detailed about how this can change the distributed ledger technology, can change the post-processing of securities, because that's a huge area, quadrillion-dollar markets from nations to nations, corporates to corporates. We all do trading, right? So we know the number of trade execution and the processing takes time. The settlement of that transaction has to be conducted and executed with finality, and that is where this all plays. Now if we go into the page number 4 of this particular article, so in here they are actually talking about this new technology, which is DLT. This actually clearly shows how the distributed ledger technology is changing the space. And whenever we are talking about this, keep this in mind. They already know that the technology is kind of different. Like you have 2 different scales in which one will be permissioned and the other one would be permissionless. Now, whenever others talk about permissionless, decentralization and other stuff associated with it, keep in mind that permission blockchains will be the best thing suited for central banks and the monetary authorities. If they are to regulate the space well, then they need permission blockchain. Why? Because In this one, it reads, permission blockchain system is one that is private, closed, or restricted, whereby central authorities control which entities are permitted to join the network to participate. And in that respect, when we read through this, we understand that once the organizations are actually looking into this, they have actually done some projects, say open source projects such as Hyperledger. Now that was a permission blockchain using distributed ledgers, right? So firms across the financial service industry have tested use cases for permission blockchains. They are not actually diving so deep into permissionless because they know the regulators will come in, they will push the brakes, and it may kind of end the entire pursuit. Now regarding the security post-processing issue, when we can actually see three kind of different charts. Now the flow is from issuer, permissionless blockchain, smart contracts, and then towards a decentralized exchange. Now in the centralized configuration, you can actually see a permission blockchain inside that for the entire thing, and then from there it comes to the STP, also operates exchange, right? Otherwise it's a hybrid configuration. Issuer, permissionless blockchain, then from there, similar to this one, it goes to STP. And at the same time, STP using permissioned network will be there. Whereas this one in the permission network directly goes to STP exchange. Whereas here it operates like this. It moves from permission network to perform transfer, agent registration, and then to the post-trade activities. So that is kind of a hybrid configuration, right? In the European Central Bank's study about distributed ledger technologies, in this file, when we move into the page 23, we can see this DLTs and future of post trading in securities market. So with this one, we can actually kind of say the entire market. Now this one is actually a bit old, considering that this one was new from DTCC, which is in 2019, and this one goes back to 2016. So the study about this has been happening in the background. Blockchain and consensus ledgers can either record tokens, assets that are native to the ledger and can be used as a part of users' incentives or claims that is set for IOUs, right? It is the only way tokens are used that settlement in the distributed ledger is sufficient to discharge two parties from their obligations. So the finality of that settlement is being talked about here. Now when we actually move ahead, we can actually see the next thing, which is impact of DLT in different layers of post trading. Now, given that one, they are actually giving Ripple as an example here. Number of innovators have also already been able to supply their products to the financial institutions, in which Ripple is an example which they are showcasing here. And as they talk about the consensus ledger. Nasdaq and Symbian have issued private stock on private and public blockchains. So they are actually talking huge. This is not a small thing when they talk about Nasdaq and the post trading, because around the same time we saw that DTCC is also looking into the same. Recently we played a video from the chief of DTCC talking about the same, right? And then the next highlight here is about the settlement layer. Now that's not only it. When we actually move down, we also get another chapter which detailed the impact of custody layer 2, because here the regulations, even though it looks like small, know your customer and anti-money laundering, but in terms of the actual regulations, that actually dates kind of, a bit detailed. So here when we read, the notary role cannot be delegated to issuing companies or governments due to the misalignment of economic incentives this would create. It's necessary that a third party perform this role in order to ensure that only the amount of securities publicly issued is traded. So they are actually looking again at a third party to do this. So the validation and therefore settlement of a transaction could be delegated to nodes operated by a range of market participants. If you look at RippleNet and how it works, you kind of get an idea what they are talking about, right? This, however, raises issues related to confidentiality given the DLT technology at least, and the transactions may therefore need to be treated confidentially. So when they are looking at third parties, they also have to consider about their confidentiality issues, right? Now when we actually come down into the clearing layer, it actually talks about the possibility of instant settlement. That is the ledger being updated immediately after a trade has been executed and validated. So immediate, instantaneous settlements are not only being happened or being implemented or looked upon in the payments or remittance market, it is now also happening in the securities market. So considering the payments market, yes, it is huge. Within that payments market, we can separate remittance as one and securities trading, post-processing of securities trading as another one. As retail investors, we are also affected by the regulations, whichever they are implementing. But when looking at the managers who manage, millions of billions in fund, they actually need regulatory clarity to step in. Otherwise, they can't actually move into this. But all this being said, we also have to look at the regulatory advances, how the space is improving, right? So when we look at that, we can see in May regulations kind of Reserve Bank of India kind of clarified the regulations in India, right? They told there is no ban you can actually do as financial service providers. Now Taiwan publishes new security token laws. So as we go, you can actually see there are improvements happening all around the world regarding this distributed ledger technology and crypto assets. When we come to the bottom, as we saw in DTCC, they are actually proactive in this space, and they are showing here they unveils two security token research platforms to move ahead. But why still the price of XRP and others are still low? I can say that in this first article, we can actually see that the US 2020 US has come up with something new, and that classifies like it into three: cryptocurrency, crypto commodity, and crypto security. So that is again confusing, right, for retail investors. Whether XRP will be classified as a security or not, we don't know. But as they state the definition for each of them, say cryptocurrency is now a representation of United Nations currency or synthetic derivatives resting on a blockchain or decentralized cryptographic ledger overseen by Department of Treasury, blah 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 blah. But what is crypto commodity? Is the economic goods or services that have full or substantial fungibility and are treated by markets with no regard as to who produced the good or service. So here for me, I think XRP should be falling under this one, crypto commodity, because it provides a service. It is a utility token. As far as I'm concerned, I understand that in this way. And then they have crypto security here, which is all debt, equity, derivative instrument. It is similar to that of securities, commodities, and currency, but it is in a crypto form. They are mentioning it. But remember, at the same time, recently also the FUD is coming out like this can be happening, saying XRP, Tron, and others can be mentioned as securities. Now, in this aspect, it won't be securities. It would be like crypto securities under the new regulations. But depending upon how we actually check this, they are still using that Howey test. So if they are still using that test, then also if it is not, say for example, XRP is not providing any access to company Ripple. If company Ripple is in benefit, that doesn't mean an XRP holder benefits from that, right? If the share value of company Ripple goes high, that doesn't mean you as XRP holder gets it. And in the same way, yes, as an XRP holder, if you are getting profit, that doesn't mean Ripple, the company, is getting profit on their share. Yes, it will indirectly affect them because they hold a lot of XRP, right? So based on the traditional test, it's kind of, confusing. They don't have a clarity there. And that's why they introduced this thing, crypto commodity, crypto security, and cryptocurrency. In that one too, it can actually fall in crypto commodity in my perspective. And but this issue of the security and all, we know that the Bitcoin was and Ethereum was stated as it's not security, right? So when we are delivering the utility, what you have to understand is, I'll play this video, but before that, keep in mind Bitcoin blockchain is working on the proof of work system, and there are fallbacks for it. Even though it was the first one to do in this manner, it still doesn't have all the advantages like XRP ledger.
Confirmed once and for all. That's very important. I think, in a way, I think of it in the Bitcoin community, they have a problem because the blocks aren't really immutable. If you can power up enough machine, you are actually able to change what's once been written in the blockchain. You can redo the chain of blocks, if you think of it. They don't really have a immutable ledger. It's just the probability of actually being able to change the blocks are getting lower and lower. I think it's very important for our industry to see, can we create an immutable ledger? And then if there are mistakes done, if there are errors done, good, they're written once, you see them in the ledger, and you can then redo the transactions, revoke the transaction in a subsequent block. I think that's a very important part here.
In reality, this is what it looks like for XRP holders awaiting the regulatory clarity. Even Bitcoin, Ethereum and others are being called out. Still, we as XRP holders do not have a proper regulation, right? Even though it delivers the utility and the use cases all over the world as of now, with central banks, it's still awaiting the regulatory clarity. So in this aspect, this is not a joke. Once we have that clarity all over the world, or at least say US market is announcing it as a crypto commodity, then it should take off in price. I'm requesting you guys, if you like the content, do hit that like button and the subscribe button along with the bell notification icon.